Hello, welcome everybody. Thanks for being with us this afternoon. I know you're accustomed to me be broadcasting live from lately from Park City, Utah, but I am now in Massachusetts visiting some family. So I'm happy to be here on the East Coast. Um, I have to thank our friend Joe on Tactive, who just came on. There you are, Joe, who has presented to you all. It may not be you because you may not have been on that webinar, but Joe's a good friend of a friend and has become a good friend, and has referred me to Richard. Is it Rich, or how would do you care what I call you? Rick?
Rick or Richard, either one.
Rich, okay, Rick. And so we're super delighted to have Rick and his brother on today. And of course, it couldn't be better timing in terms of what's going on with Bitcoin in particular, and the people who are advocating Bitcoin as an investment, but also, our friends, we've had Scaramucci on and Saylor and all those guys that have been, super, heavy into Bitcoin and other cryptos, for example. And so we're going to learn a good deal today about what Rick and his brother are doing in mining and what's going on with Bitcoin mining and sort of state of the art of what's going on here. So big shout out. Thank you to Joe again for arranging this, and happy to see you all here. Just a little housekeeping as usual. We can't see or hear you. We know you're there. If you have questions, please post them as they come to mind on the chat box or the Q&A. This is going to be a luminary series, as you are aware, where we're just going to be talking about what's going on. And then a week or so from now, we're going to be doing a pitch webinar for the liquid mining as well. So here's your opportunity to ask as many questions you'd like. And as you participate today, and if you have anybody that comes to mind that might benefit from hearing this as you have, we'll be posting it to I think we'll be posting it, it will be up to Rick. I keep on doing that. There's regulatory issues that we just have to address of posting it to the YouTube channel Family Office Insights, but we will indeed be doing this again in a week or so you can mention it to others that might benefit from hearing it. And of course, the pitch is going to be to raise money for liquid mining, which is well underway now. So with that, Rick, I keep on looking at Richard up here and Rick down here. Anyway, so thanks for being here. You want to just do a little background and then we'll get into some questions.
Yeah. So, you mentioned Joe Gissi of Tactive. So just to be upfront, it's on all of our documents. I'm also the chief operating officer for Tactive, and it's a SEC registered RIA firm. Liquid mining has nothing to do with Tactive. I just want to make that absolutely clear. And I'm not talking to anybody today on behalf of Tactive. So I attended a class at the New York Institute of Finance on digital assets last year in 21, probably around May. And as I'm going through that course, I realized how much of the digital asset space, not only did I not realize, but also that I had really no idea of the depth of what was going on in blockchain and digital assets. And the more I dug into it, the more intrigued I became. And in fact, when the internet came out, back in, well, technically the early 90s, but it really started gaining commercial acceptance probably around 95. And I think probably everybody on here who was of age at that time remembers the ding, you've got mail from AOL, because that was really the real kickoff for people getting on the internet. And then there's a lot of similarities, and we're going to hopefully talk about them, but there's what's called the S-curve for the adoption of technology, whether it's the automobile, landlines, radio, TV, and nowadays you have the internet, cellular phones, tablets, et cetera, et cetera. and they all follow a pretty predictable S curve. And, you know, adoption in the beginning at the bottom of that S curve is kind of low, and then all of a sudden it spikes out, and then it kind of levels off. And some technologies are actually starting to now curve down, i.e. the landlines. People are no longer really getting landlines because they're going into cellular phones. But I digressed a little bit. Getting back to Bitcoin and crypto, the more I got into it, the more I realized that that was something I needed to be part of. So I met my brother, Joe. He is up in Michigan, about 40 miles north of Detroit. We were up there for a family get together. And I said to Joe, look, I don't know if you're invested in crypto in any capacity currently, but it's something you ought to take a look at. And he says to me, I'm already invested. So we were both invested at the same time. And then we spent the next 5 days not only looking at investing, but we started really diving deep into mining. And we did a lot of research, and I decided I was going to build a financial model and kind of see if the mining really could produce what we expected it to do. And so I spent a couple of weeks building this model. And in September of 2021, we went out and bought a small Ethereum mining rig. Ethereum is ETH. And when we were testing the results of that mining operation against the model, they were literally, you know, spot on, within pennies. And so we decided we're going to scale that up even more. And the problem with Ethereum at the time is we were buying these GPUs, which are graphic processing units, and they're powerful enough for Ethereum, but not nearly as powerful as ASICs, which are what we use for Bitcoin, which I'll explain during the webinar, unless someone has a question on it. But with GPUs, you're in competition between two primary parties. One are the miners, but the other party are the gamers, because they use the exact same unit. So the price was being driven way up, and we realized that for us to get let's say a 12 unit GPU rig put together was going to cost us around 36 grand, and we could buy an ASIC for around 10. So the math was pretty simple, and we decided to go right into Bitcoin. And then things kind of escalated very quickly. I'm now telling you where we were in October of 2021. And we decided we were going to jump into Bitcoin mining. And so we placed an order for 30 ASICs. And as they're already purchased now, and they're on their way to the United States. And I did some more research. I said, Joe, we got a bit of a problem. He goes, what's that? I go, well, you know, each of these units uses about 3.5 kilowatts of power. So if we're doing, let's just say 10, we're using 35 kilowatts of power a day. And at our retail rates that we're going to be paying, it's going to be still profitable, because at that time, Bitcoin was still in the $50,000 range and $40,000 range. So it was still profitable. I said, but not as profitable as it could be. But the bigger problem was each of these machines puts out about 75 decibels of sound. So times 10, you know, you're up to 750 decibels. You wouldn't be able to live in the house. And your neighbors probably couldn't live in theirs. And each of these machines puts out about 3,500 watts of power. So now you got 3,500 watts of power. I'm sorry, 35,000 watts of power coming out that you got to get rid of that heat. So we quickly realized we need to find a building. And you would think finding a building is not hard, and it's not, but finding a building with power is hard. And so we finally located a building in Pontiac, Michigan. It took a month or so to negotiate the lease. We got the building on January of 2022. We started operating the equipment that we had. By then, we were now up to 145 ASICs. But then we wound up spending 6 months negotiating with DTE on our rate. And it took a lot longer than we thought it was going to. But the end result is we have some of the lowest power that you can get. We pay about 4 cents a kilowatt hour for our power, which makes us very profitable even today. So that's kind of maybe a little more drawn out of a story than you
No,
wanted.
that's good. That's good.
So that's how we got involved.
What, Rick, what, if anything, is the, and it might be idiosyncratic to the power company, but do they care, aside from wanting to maximize their profitability, right? Do they care what you're using the power for? They knew you were mining, right? So
They did. And in fact, in Michigan, since we got involved, there are other companies that are looking for power up there too. You got to remember, I mean, I'm not going to go down the rabbit hole where we could talk about like the usage of power to mine Bitcoin and how that's affecting the planet, because that's almost
Yeah, let's
like,
leave that for another day.
yeah, that's kind of a false argument. What
Yeah.
the power companies are looking for is they would like people that are utilizing power 24/7. In fact, that's our agreement. We have to use the power 24/7, 365 to get that rate. What does that do for the power company? They can predefine what their usage is going to be on the network, and now they can expand and enhance their network and effectively enhance the grid capacity and the durability of the grid. And that's really what Bitcoin is helping to enable. There's not a lot of conversation on that, but Bitcoin in and of itself, not only from the miners that are doing it themselves, but in conjunction with working with the utility companies, are really helping to strengthen the grid. And that's one thing that needs to be talked a lot more about.
So that suggests to me that predictability, which we all know is important to power companies, because fluctuations cause them to buy stuff off their grid in times of increased demand, and it just costs them more money, right? It's just like anything else. Is that pretty accurate?
In many places, you have states, for example, Texas is deregulated. So when the power surged down there and this massive heat wave that they had, the miners actually shut off their rigs and they actually got paid not to mine. In Ohio, it's deregulated as well. And we're looking at several properties in Ohio. But right now in Michigan, our agreement is very unique in the sense that not only do we have a very low rate on our power, it's uninterruptible power as well. So we do not have to turn our power off because that's in our agreement.
And so can we talk about a little bit about the delta between, if you had continued to put these in your house, are you paying 8 cents or 5 or what, if you just wanted to plug one in and do it at home,
So it
what's
really
the
goes,
extreme?
so it depends. So in Florida, where I'm located in Jacksonville, I'm getting ready to relocate to Michigan. But right now I've been in Florida for many years, but our power at rate in Jacksonville is 10 cents a kilowatt hour. So 250% more than what we're paying for. In South Carolina, I just had friends come down and we were talking about their power and they're paying 11 cents. In Michigan, the standard retail rate is 14 cents. So the fact that we went from 14 cents to 4 cents is about a 70% decrease in power. I'm sorry, in the rate of power.
Right. So you don't have to be precise, and I know that you want to be because that's your makeup, and I'm saying that in the most affectionate way. If you were to take the same equipment and not necessarily buy it at scale, at what price does Bitcoin have to be to make money at 14 cents power?
It's right around. So where it is right now, it depends on what your other overheads are. So give me 1 second, I'll answer that question.
Yeah, and I'm just trying to demonstrate for the audience that, you can do this at home, but, there's moving parts, literally, but figuratively, that you've got to consider. And I'm making a case for them to just give you money instead of doing it themselves. And I happen to think that's a good idea, but that it's not necessarily good for everybody. But there's a pretty extreme delta between doing it yourself with 4 rigs and doing it at scale the way you're doing it. That's kind of what I was getting at.
Well, I'll give you an example. If you were paying in Michigan 14-cent power, which is what our initial rate was before it was renegotiated, at 11.5 cents a terahash, which means that for every terahash of capacity that you're generating, and I realize I haven't explained that yet. It's in my presentation, but the way that you earn money on Bitcoin is per how many terahashes that you are producing. And every terahash earns, in this example, 11.5 cents a day. So if you're earning 11.5 cents a day and your power is 14 cents, you're at break even. Anything below that, you're losing money.
Got it.
At 4.5 cents, I'm sorry, at 4.1 cents, we can drop all the way down and we can make money all the way to about 3.5 cents.
Yeah.
So there's a pretty big delta there.
Super interesting. Yeah. What can we talk just a little bit about, aside from, your power cost is locked in, the
Yep.
equipment is on its way, and you have a bunch of equipment. What could go wrong? Natural disaster, that sort of thing. What else can go wrong?
Well, I mean, if someone doesn't bring it up, I'll just bring it up ahead of time, is there's been a lot of talk about governmental interference or regulations from banking or the IRS or things like that. So what's really interesting, I've been to a number of seminars where we've had, or conventions rather, where we've had senators. Senator Loomis was at the Bitcoin Miami convention, heard her talk, and there's several bills in front of the Senate right now that are expected. I don't think it'll happen before the midterms, but there's a lot of education going on in the Congress, both the House and the Senate, of the benefits of mining and what it brings to the economies, as well as the potential benefits of some of the infrastructures that are being developed. And we can talk about that in a second as well. So there's a lot of jobs that are being created. There's billions of dollars being invested. The biggest investor right now is Google Alphabet. The next largest one is actually BlackRock. But if you look at the top 100 companies, they've invested almost $10 billion into just blockchain alone. So I don't want to get off topic on that question. So you have, and the reason I'm bringing up the players that are in the space is because they all have phenomenal contacts in Washington to help push their agendas through. So they're not investing billions and billions of dollars because they think it has a chance of going out of business. But so that's kind of anecdotal, of course, but I think you'll see that come to fruition. The second thing is taxes. So the IRS has already ruled that Bitcoin specifically is, as well as Ethereum, are both assets. So and it's going to be interesting because Ethereum is now going to a different process of consensus, which is proof of work to proof of stake. And we're going to have to see if that consensus or that tax treatment remains the same. I would think it will, because it's already been codified, although it can be changed. But Bitcoin is considered property, so it deals with capital gains tax. Now, if you're mining, it's different. As you earn Bitcoin, it actually counts as income. So there's a different treatment if you're mining. And then as far as the FDIC, they have come out and said that they really don't have any interest in Bitcoin. It's more the stable coins that they're interested in. Anything that's representing itself to be the equivalent of $1, they want to make sure there are regulations in place to protect the investors that are buying those stable coins. So as far as Bitcoin is concerned, there's a lot of talk, there's a lot of smoke, but really there hasn't been anything on the legislative side to do anything to prevent Bitcoin in the United States, at least.
So what the we can talk about this a little bit now, if you don't mind. The structure that you put in place is that you're going to do the heavy lifting, do the CapEx, find the right machines, get the right cooling, get the agreements for the low cost electric, and then pay a coupon to the investor and protect the downside by having the assets of the mining operation leaned to protect those assets. Is that a fair assessment of it?
It is. And I want to just come real quick to your previous question.
Sure.
And you had mentioned something that I didn't address, which was natural disasters. So, they have the ability to happen. One of the reasons we chose Michigan is because while they can have severe storms, they're not as common as in the rest of the Midwest with tornadoes. And they don't get the extreme heat like they get in Texas, as an example. So our cooling costs are nil in Michigan. But to help mitigate that that chance of natural disasters affecting us, we already are looking at several other facilities that we can acquire so that no one property has all of our capacity in it. So we'll be diversified geographically as well. So I just wanted to make sure I made that point.
Does it seems like if you can't get the electricity for that price, then you would turn the switch off because it wouldn't pay to mine. For example, people have, diesel generators to back up power in hospitals, but it wouldn't make any sense because it just would be too expensive, right?
Yeah, that is absolutely correct.
Yeah. So in the case of your structure, somebody gives you a $500,000 check and invest it in the company. Just walk somebody through how that, what's the waterfall look like, what's happening. Just, you don't have to get into the weeds, but just what can they expect?
So it takes us about 60 to 90 days to get everything fully purchased and then delivered to the facility and then installed, set up, and then deployed. It's probably faster than that. We could literally have the miners within 2 weeks, so within 14 days. Some of the other equipment can take 30 days to get, but believe it or not, that's not the holdup. So if all we were relying on was all the equipment that we needed for mining, we could be up and running probably in about 45 days. The holdup is the transformers that we need for the power. It's getting those transformers that takes the longest lead time, and then getting permitting at the respective municipalities to go ahead and get approval to put the power in, and then get the the electricians to hook all that up and get that done. So that's the bottleneck. The access to the equipment that we need for mining is not the bottleneck.
And so how far away from that are you?
Well, we already have our agreements, and we're already going to be placing an order for probably 500 machines next week. Our first close, we have $1.5 million that we're ready to close on next week. So that'll be the first order that we'll be placing, is for the cooling equipment and for the miners. My brother had a meeting with DTE, which is our utility company, today. And now we're starting to get an idea of what we need for additional power to be brought into that facility. And we're already working on identifying the transformers that we need. So that's already in process as we speak.
And so how long do you think that what presumably is the bottleneck is going to take? Is that 30 days or 60 days?
So I think it's probably around 45 to 60 days to get through the permitting process, get the transformers lined up, get everything lined up with the electricians, because there is some coordination between DTE as well as with our electricians. What's unique about the building that we have right now is that building, we own the transformers that are there. So DTE just delivers the power to our building. It's a former printing company, so it was already built with redundant power in there. So earlier I mentioned that if we lost power, it's uninterruptible. What I didn't mention was that we also have redundant power there. So if one part of the grid went out, we have a total separate feed that would still be up and running. Now, is there a chance that both of them could go out? Yeah, I mean, anything's possible, but we have redundant power at the facility. So, I mean, if we were looking at a full deployment schedule, the way it is in our business model is from the time we receive the funds, we're paying 10% either monthly or quarterly, depending upon how they're invested. And then we keep a reserve account to pay those funds out. But then we expect that the actual production monies will start being paid out about 90 days down the road.
Got it. Great. So one of the things that struck me is if if FTX is so smart and Sam is so rich, and aside from not being in the US, and being in the Bahamas, and maybe they do have a mining operation, but why wouldn't somebody like that with endless amounts of money just throw a bunch of that endless of money at a mining operation if it's so lucrative?
Well, I mean, they're making a piece of every transaction, both on the buy and the sell side. So we all know that the financial systems have a bid and ask. The spreads are pretty large in the cryptocurrency space. So
Yeah.
I don't think he needs to go into mining to make the amount of money that he's making.
Yeah, that's a fair question. It's a fair answer. Yeah, he's more productive doing something else, right?
Yeah, and he doesn't have to worry about power, fluctuations, or does the price get down to a point? They're making money on every single trade, no matter what the price is.
Yeah, totally makes sense. Are there others that have been doing successfully what you're about to do?
Yeah, there's some pretty substantial mining companies. It's really ironic in the sense that I was very frustrated, as was my brother. We were very upset in the length of time it took us to negotiate our power deal. In retrospect, though, we're very fortunate because in the time that it took us to negotiate that agreement, the price of equipment has dropped by almost 70%. So we're buying equipment literally on 30 to 35 cents on the dollar. So we're literally able to leverage the money that we're buying. And I mean leverage in the sense that we're able to just buy way more equipment for the same number of dollars. And just to make it clear, one of the reasons that we saw some of the major downturn in the price of Bitcoin was there was just a tremendous amount of leverage in the system. People borrowing against their Bitcoin to buy more Bitcoin, miners borrowing against their equipment and Bitcoin to buy more equipment to expand faster. People that saw they were making a fortune in the market, but more people were making more money in Bitcoin, so they borrowed against their margin account to buy Bitcoin. So all that leverage wound up getting deleveraged over the course of the last 4 to 6 months. And we're now seeing, like on Friday, 210,000 Bitcoins got hit in the market. And that's one of the reasons the price dropped from around 25,000. We dipped to about 20, and now we're back in the 21.3 area right now. So the market is pretty robust. It's gaining global adoption every single day. And so we'll still see those shocks to the system every once in a while, but I think they'll be more and more minimal as the adoption curve in Bitcoin gets more and more steep.
I saw something the other day. I was going to send it to you, but I just got distracted. But to me, it was instructive in that the bankruptcy judge for Celsius allowed them to spend money on their mining operation, as opposed to causing them to shut down, which would suggest that the judge thinks that that's going to be productive to help them dig themselves out of the hole and pay back their shareholders, right?
Well, and Celsius also had a lot of, they borrowed a lot of money and lent a lot of money. And then you had Luna that crashed as well, which was an algorithmically programmed stable coin, which is why I think you're going to see the
FDIC,
the FDIC, and I think it's pretty clear. It's not definitive, but I think we're going to see the CFTC be the one that's going to be in charge of the crypto space versus the SEC. I'm not saying the SEC won't have some involvement. They will, because there are public offerings, but I think we'll see the CFTC involved. But when you have these companies, and there's a host of other companies that have had tremendous financial stress as a result. Some have gone out of business, some have merged. But that's true with any technology. I mean, if you remember the dot-com era, I remember Greenspan in, what was it, 1995, saying we've reached the point of irrational exuberance, but it took 5 more years before the market crashed. So here we've already reached that point. What's kind of unique this time was the amount of leverage that was in the system. We've seen these these kind of waves with Bitcoin, because it goes through what's called a halving every 4 years. And I'm going to explain that a lot more in our webinar. But at that point, the amount of Bitcoin that gets issued gets cut in half. And that's really the catalyst for some of the really large increases in pricing that we've seen. This one just happened to correspond at a time where there was a lot of free money floating in the market through the stimulus packages that were passed, because it went from 2020, when the halving happened, to a new record high of 69,000 in 2021. And there was a lot of free money washing and sloshing around. So I'm pretty sure that had something to do with all of that as well.
I don't think there's any doubt about it. I've tongue in cheek said part of the reason, aside from people coming through COVID and realizing that maybe going to a job every day isn't what their life is all about, took some of that money and rode the Bitcoin up. And so they didn't have to get a job because they had money, and now it's kind of gone, but maybe depends on what they did. I'm not profiling or generalizing it, just
Right.
the theory that, people got their stimulus checks or whatever else they did, and they saw Bitcoin go like this. And so, and they participated in that. Just like anything else, it's, there's always an opportunity for something to go a different direction pretty easily. But I think people have participated in that upside and maybe are suffering from part of it now. But it's just it's funny to see how people generally would be willing to work, and there's a whole bunch that aren't. But
yeah, it's still a bit of a conundrum.
Mhm.
If they all made all that money in Bitcoin or the market, they're very fortunate, because most people also wrote it down because they didn't think it was going to last very long. So one of the things that's kind of unique about us as well is that we have no debt. So everything we have, including all the infrastructure we've already put in the building, we've already paid for. And the only debt we're going to have is the result of these offerings. But we're not taking on any leverage. We're not lending or borrowing against our equipment. We don't want that type of stress on the balance sheet or on operations. And we will probably only hold somewhere between 5 to 10% of Bitcoin at a certain point. Right now, we're using everything we generate to just keep expanding the farming capacity of the operation.
So how does it work at scale? So you have CapEx, you have expenses, you have rent, et cetera, et cetera, et cetera, and you mine 1 Bitcoin. Do you turn it into fiat immediately?
Pretty close to,
Yeah.
immediately. So if we say immediately, like within 24 hours, yes.
Yeah.
Immediately, like instantaneously, no.
Yeah.
But pretty close to within 24 hours, we're converting it to expand the operations and have the way the entire financial model is built is that the proceeds that are being generated pay the investors their return, and then we buy more equipment. What most people don't understand is that our financial model is built on the premise that Bitcoin doesn't increase from $20,500 a coin for the next 3 years in a row, just never increases. But yet the investors still get growing income. Well, how is that possible? Well, it's possible because we keep expanding and generating more Bitcoin through buying additional equipment. And a portion of that additional capacity, we're making available to the seed investors. What we've tried to do is make the seed investors effectively in the catbird seat. In other words, they're in a very superior position. They're in a senior position if liquid mining were ever to have to either stop mining or slow down or whatever, where we couldn't make the payments. They're in a secure position where they have the right to have all the equipment liquidated to make them whole. My brother and I have common stock, and we can't even vote on any of the issues that relate to the debt instruments. So we've done that on purpose. Second thing is the note holders, whether it be the note or the preferred, they have the ability to convert their holdings. They can redeem their holdings, and then if they convert, let's say they wanted to convert to a common, if we did some sort of offering down the road, which we do expect, but I just don't know when that would be. I'm letting people know it's probably 4 to 5 years out, but the initial holding period is 3 years. So if at the end of 3 years, they don't want to be part of it anymore, they could just redeem it for the full face amount of the preferred or the common. But let's take another look at it. Let's say we are able, the only way we can force conversion is if we're in the middle of some sort of public offering, a merger, acquisition, or an IPO, or some sort of public offering. Well, if that's the case, and we decide we want to call, well, the investors are still able to make that determination. Is that in their best interest to convert, or do they want to redeem? So we've left all the power with the note holders and the preferred holders.
And so you're going to raise up to 5?
Yes.
And you hope to close what?
We're going to do $1.5 million in the, I would have told you this week, except one of our vendors, which was an IRA,
just a custodian. No,
it wasn't a custodian. It was a self-directed IRA account provider, gave us the wrong form to have all our investors sign that wanted IRAs. So we had to get those all re-signed, which is delaying the closing. So we hope to have those all done by tomorrow and hopefully have a close early next week on that. In the meantime, we have about $1 million in other commitments. So our goal is to finish this out, as quickly as possible to take advantage of the low price of the equipment that we can lock in right now.
Yeah. Super cool. We have time for some questions if anybody has any. There's a couple here, and I've got a few more. And then, like we said, we're going to have a full-blown webinar on this in next week sometime. What do you think? Everybody's thinking the same thing, right? At least on some level. If Bitcoin goes from where it is today, let's just call it 20 to make the math easy, and halves, meaning it goes to 10. Are you out of business, or are you still able to make money?
We're making profit. We're expanding the farm. We're just probably not growing the interest income to the investors beyond the 10%.
So capital secure,
mm-hmm.
Your corpus is secure, and your coupon secure. It just, you're not going to be able to grow, become
right. So I'm going to just go to a different screen real quick. So let's just say, for example, it dropped to let's say 4.5 cents a terahash, which would basically put it at about 10,000, which you just said. So we're still growing the farm, but the interest income that we're paying to the investors for 3 years, if it never got above that, would stay at 10%. But if we take the opposite side, so 45 days ago, Bitcoin was 15 cents, just to give some comparative difference. So at 15 cents, instead of being 10% return the first year, it would be 34, 100, and 295. Now, I realize those are pretty stunning numbers, but I'm happy to drill into why they're effective. So the cost of our equipment would obviously go up, because that's just the way this industry works. As Bitcoin price goes up, the cost of your mining equipment goes up. The manufacturers increase their price. The offset to that is that your increase in price is not nearly as great as your increase in profitability. So that's where the offset, so that you're able to maintain a growing income base and revenue base, even though you're paying more for the equipment.
Yeah, it's somewhat counterintuitive, because you would think that as the price of homes goes up, when a home goes up when interest rates are low, and the price comes down when interest rates are high, because something's got to give, right?
Yep.
And so I guess it's less counterintuitive than I thought. It kind of makes sense, is that if the manufacturers of the mining equipment show an increase in demand because the cost, the price of Bitcoin goes up, then arguably they can charge more for the equipment.
Yeah, and the way they charge it, it's usually on a 10 to 12 month payback. So they'll look at what Bitcoin is earning on a daily basis, and they will price their equipment such that you would be able to recoup your money in a 10 to 12 month basis, which is just an additional windfall for them. And that's just kind of how it works. So one of the things, so there's four real pricing issues that you have to be concerned with mining. One is your general overhead, rents, payroll, things like that. One is power. One is the cost of your equipment for mining. And then the fourth is the price of Bitcoin. Well, the only one of those that most miners can't control is the price of Bitcoin and the price of the miners. We can control the other two, depending upon where you're located and what kind of agreements you have in place. We specifically can control those first two. We're also looking at controlling the third one, the price of the equipment. We're actually talking, and I don't want to get too far into it, but we're actually talking and negotiating on how to build our own ASIC. So we don't have to rely on the larger manufacturers to get their equipment, because Intel has been nice enough to make chips that are available for mining Bitcoin. And we're already working on that.
Wow. Well, you can't be the only one that figured that out, right?
Maybe we're not.
Yeah.
No, we're not. Hive just bought like 1 million chips from Intel, but it's a whole lot different when you're mining to say, I'm just going to go buy a machine, and you're a small mom and pop. I'm just going to go buy a machine, versus you're going to start building your own. It's a order of magnitude difference in capability. We already know the people have already identified to bring them on board in the first quarter of 2023 that can do that for us.
Yeah. We have some questions, but I'm sorry, guys in the audience, you've got to write them in. We can't turn it's a whole long story why we can't turn the audio on. So if you want to, you can write them in. So what do you expect in terms of check size? What would you prefer? 100,000, 250, 500,000?
So on our Reg D, so we have two offerings. So let me just talk about those real quickly. We started out with a Reg CF. I did mergers and acquisitions for about 15 years. And I never had a chance for the smaller investor to ever be involved. Reg CF didn't exist when I was doing M&A work. So we did that, and it's available to both accredited and non-accredited. So the accrediteds can put in whatever they want, like they can in any other offering for the most part. And your non-accrediteds, there's a whole formula that goes there. So you plug in what your income is, what your net worth is, and then it comes up and it gives you a predefined amount of what you can put in. So they can participate in that. And we got about 2 million left on that without counting any of the commitments. And to me, a commitment doesn't mean anything until the check's cleared the bank. So right now we have about 2 million left on that. On the Reg D part, it's accredited only, and that's a $50,000 minimum. Yeah, I mean, the answer to the question is we would take money from anybody that's interested in investing, wants a secured investment, and is looking at a way to get growing income in a way that is, I don't think they've ever seen before. And next weekend's webinar, I'm actually going to bring up our financial calculator and show you how just a penny move on either the cost of power being reduced or the price of Bitcoin going up has a dramatic impact on the income that the investors will earn.
Yeah, and by the way, folks, next week we're also going to talk about a structure where I don't want to liken it to side pocket, but let's just use that term, where a family office could set up something directly and have a direct investment in a way that works for everybody, but subject to negotiation, right?
Absolutely.
Yeah, so there's an opportunity for bigger checks depending on the situation. So I just want to make sure we talked about that. Super. Well, this has been great, and maybe Joe can participate next time. And oh wait, I think we got somebody finally wrote in here. There was a bunch of questions, but I handled them. Okay, when the next halving hits 2024-ish, how does that affect the profitability, since it will take more miners to mine what we're mining now? What does that look like to distributions?
Yeah, a
I
great
know you've
question.
thought about that.
Oh, no, we it's part of our plan. So
Yeah.
yeah, you can't, so that's called the halving. The halving happens every 4 years. We're in the middle of the previous halving, which happened in 2020, and the next one in 2024. So what the halving does is it reduces the amount of what's called the block reward, how many Bitcoins are being issued for every time a puzzle is being solved. And once again, we'll get more into this on the next week on the webinar. So currently you earn up to 6.25, no, I'm sorry, you earn 6.25 Bitcoins approximately every 10 minutes if you solve the puzzle and earn the block reward. In 2024, that's going to get reduced to 3 1/8. So every time there's been a reduction, what has happened in the block reward is that we have a unique dynamic where I'm hoping I'm going to do it right. So yeah, that'll be the right way. So anyway, we're going to have we have an adoption curve in Bitcoin that's going like this. So we have more and more adoption growing around the world. It's still very nascent on a percentage of global population, but it is growing daily. We have banks and large corporations throughout the United States and the world investing, as I said, billions of dollars for infrastructure for this. And it's not just Bitcoin, it's for blockchain and all the other benefits that blockchain can bring to the world. But what happens as your adoption's going up, but then all of a sudden your supply is cut in half, it's a kind of unique dynamic. It's a supply and demand curve. So, but this time your supply is being cut in half in a very systematic way. And every time there's been a halving so far, there's been a pretty monumental increase in the price of Bitcoin. And we're going to go through the halvings next week. So Ken, in answer to your question, I expect that we will see the price of Bitcoin go up, although the amount of Bitcoin being earned goes down. And that's inherent into the deflationary aspect of Bitcoin.
And is it fair to say, in the context of this question, that if you had 100 miners and you go into the halving and then come out of it the next day, then you can only mine half as much because that's all the hash rate that you have?
Yeah, so you're earning half as much for every solution. The reality, though, is when you look at
if the price goes up, it doesn't matter. I get it. Yeah.
Yeah. So I think based on this question, I'm going to put a chart back in there, a graphic back in the presentation where it actually shows since Bitcoin started through the last halving in 2020 and all the way up through January of 2022, how the price of Bitcoin has behaved throughout each of the halvings. And it's done very well for the people that are not only mining, but the people that are invested.
Yeah, that's probably a good idea. Sweet. Good question, Ken. All right, so we have to wrap things up, but super, super helpful, Rick, as usual. And I've enjoyed our conversation, and even prior to this stuff that we've talked about. And then we'll get there. There's a whole bunch of people that RSVP today. We'll get you the list of those so you can communicate directly with them, and so you can look forward to hearing from Rick. And then we'll make sure everybody who came on here and RSVP gets invited, and then we'll make the announcement about next week very, very soon as well. And look forward to having you back.
All right, Art. Thank you for your
Great.
time and everybody that's here. If you have any other questions, feel free to reach out to me. My email is rick@liquidmining.net.
Yeah, we'll make sure you get that all too.
Perfect.
So once again, as usual, thank you for sharing with us the only thing you can't make more of, and that's your time. Till next time. Thanks.